Welcome back to the Financial Edge. Today, I want to talk about stocks. And if you have any stock holdings, I am very sorry. We have been getting our butts handed to us the last couple days. I don't do a lot of talking about stocks. I do have a portfolio, just between $40,000 and $50,000. I have a Roth 401k, or not a Roth 401, a Roth IRA. I do have a rollover 401k because I did work at a job for 2 years, and the last year I was qualified for their 401k, and I matched the company match. And anyways, we parted ways because of COVID, and then it became a rollover 401k. So I have a little bit of money in that. I have most of my money in a Roth IRA. And then I do have a taxable account with Robinhood. If you'd like to link to that, if you want to support us with an affiliate link and set up something with Robinhood or Fidelity, let me know and I'll get you that link. And then also Fidelity is where I do most of my holdings because I don't like to day trade. So for those people that have the time or the knowledge or the energy to day trade and be hyper focused on the market, congratulations, you are doing far better than I am. I just don't have the patience or the knowledge to trade actively. So I know that about myself and I avoid it. What I encourage to people to do are three things. Keep it simple, right? Save your money. And then once you have 3 to 6 months of emergency savings, and I know you've heard this a billion times, I'll go over it very quickly. You need to have some money saved in your bank account, put it in a high yield savings account. I think American Express is like, and I know, right? American Express, like the actual credit card, they actually have bank accounts as well. That's like 4.3% at this time, 4.3% APY, which is nice. So I do have some money there. Once you have 3 to 6 months of money saved for your living expenses, then you can start investing. And I would just recommend, if you're not super passionate about not the real estate market, if you're not super passionate about the stock market, I would just encourage you to find a low expense fund. And this can be an ETF, or it can be I've heard mixed results about mutual funds. The actively managed ones, their fees just kind of kill a lot of the returns. So generally, I encourage people to just pick an S&P 500 index. It's very simple. Like there's IVV, VOO. Those are like the Vanguard ones. There's a couple other ones that you can choose from. So just do something very simple. Like just do your basic research, right? Don't take my advice, but just do some research. Go to Google or whatever and say, hey, what's the best S&P 500 index fund that has a low expense ratio, right? And just and that's the third thing, dollar cost average into it. Or if you want to buy the dips, now's a decent time to dip. I'm looking at my Fidelity account and they're just like a straight line down. And I'm just like, no, that sucks. But here's the thing, you guys, and this is the most important thing. Do not put money in that account that you're going to need in the next 5+ years. Those are your retirement funds. That is the money that that is plan B, right? Let's say the stock market crashes, right? You want to be okay with that. I know it's not ideal. It's not what I want, but you need to be okay with losing 50% of that money and not sell. When you sell is when you lose, right? You gotta give it time to recover, right? So if the stock market crashes, you gotta give it time to recover. And it may take 5 years. Heck, it could take 10 years, right? So you gotta be okay with that. That's very important. Don't put money in there you're not willing to lose and that you don't have the ability to let it ride, right? That's why you have your emergency fund first. That's the money that covers the blown tire, that covers the medical expense, that covers the the school supplies, or whatever it is that you need, right? That's your emergency fund, that things that you have to have that you weren't ready for. Please do not make that the stock market, right? Just don't do it, please. So I wanted to talk about the stock market. I think dollar cost averaging primarily in a S&P 500 index is the safest, most sure way to go for people like me who aren't watching the market daily. If you have a full-time job, if you don't really care about the stock market, if you believe that you don't have any leverage in the stock market, if you believe that you have no control over what the CEOs and the Feds decide to do and how that affects businesses, then just dollar cost average. Just take $100 a month, $50 a month, $5 a month, anything, and just start throwing it in there. And you can use Robinhood, Fidelity, Webull, any of those ones, right? They're all basically the same. And only put money in there that you're not going to need. So if you're planning on buying a house in the next 2 to 3 years, that's not a great place to put your money to do that. And let me explain. When I bought my first house, it was $400,000. I used a first-time home buyer program where I only had to put 3% down, I think. And with closing costs and all that stuff, it ended up being about $15,000. I had $20,000 to my name at that point. No assets. Well, I had a car. I had a car that I owed money on, right? So like $20,000 minus like the $8,000 I owed on the car. So my net worth was $12,000, but I had $20,000 cash, and $15,000 of that was required for the down payment. I feel very strongly about this. If I was to put all of that money in some type of, Tesla, Google, Facebook, Amazon, S&P 500 index, whatever, when it came time for me to pull that money out and say, here's $15,000, there is a strong possibility, and I don't remember the exact date, I don't know where the market was, I can't go back in time with magic and math to figure it out, but there's a strong possibility that I could have had barely $15,000 at the time that I needed it. I could have had less, or I could have had more. Maybe I could have had $24,000, right? But the point is, it's basically a roll of the dice. It's a gamble, right? And when you're about to make a huge purchase, such as a house, do not gamble with that money. I know it mathematically, to my brain, it did not feel good having my money in a savings account, not being invested, but my goal was to buy a house. So that was more, I think at that time I maybe had a couple $100 in a Roth account, or in a Robinhood account. Like I just threw a couple $100 at it just to play around and see what happened. The 99% of my money was just sitting in a bank account, barely earning any interest. I don't even think it was in a high yield savings account at that time. I might have been getting 0.5%, because I didn't want to gamble with it at all. Not mutual funds, not CDs, none of that stuff. I wanted my money immediately when I saw a house that I wanted to buy. So that was really important to me. So please, if you're in the stock market, I know it sucks right now, hold on and just keep dollar cost averaging, keep buying the dip, keep putting little bits of money here, and like I said, if you don't have your emergency fund ready, then stop investing, right? If you want to buy a house, stop investing, right? Take all of that money and set it aside for emergencies, for a house. I mean, for a vacation, I would recommend grinding. Like if you don't have any assets, you don't have your money saved. Like if you're not worth a couple $100,000, like if you don't have any assets or anything, you may not be able to go on a vacation. I hate to say it. I've for my birthday, I've taken like 3 days off, right? Like a weekend and then like a Monday. But that's pretty much it. I haven't taken a vacation in a while. And am I stressed? Absolutely. Do I want to take a vacation? Absolutely. Do I feel like when I come back from the vacation that it was that my level of stress and depression and anxiety is higher because I know I have to come back and continue to grind? Yes. So I don't really like taking vacations. I just want to keep grinding until I get the one big vacation, which is financial freedom. So once I get to that point, then I'll feel comfortable saying, you know what? Boom, I'm taking the ultimate vacation. I'm not going to do anything for 3 to 6 months other than go to meetups, hang out with other people, and figure out what I want to do next. But anyways, that's a side note, different video. I want to try to stay more on topic for these things because I appreciate you guys hearing me out and listening. And my advice on the stock market is my knowledge is very little compared to real estate, and that's why I focus mostly on real estate. Real estate is my plan A. Keep it up, you guys.